The modern financial market is full of platforms promising effortless wealth, usually driven by some proprietary automated system. Take Winvest, for example. Founded in 2018, the platform claims to use next-generation AI and quantum analysis to trade on your behalf. Their core offering is highly specific. You deposit your Bitcoin into a 60-day investment plan, and they pay out a fixed 3% profit every single day. By the end of those 60 days, that structure guarantees a total return of 180% and requires absolutely zero trading effort on your part. To back up these numbers, Winvest projects an aura of institutional grandeur, stating their headquarters are located right in the heart of New York. This table highlights exactly how massive their claim is. Traditional markets average 8 to 10% over an entire year. Winvest promises 3% in a single day. Even standard cryptocurrency staking generally sits between 4 and 12% annually. They make entry incredibly appealing. The platform charges zero hidden fees, offers 24/7 customer support, and allows you to start with a minimum deposit of just $10. This leaves us with a stark choice. Either Winvest has achieved a legitimate market-beating technological breakthrough, or this structure is a mathematically unsustainable trap. To figure out which one it is, we have to strip away the AI buzzwords and strictly analyze the underlying financial mechanics. The first major friction point is the mechanic of offering a fixed, guaranteed yield inside highly volatile crypto markets. To participate, you must deposit real Bitcoin. That capital gets locked into their 60-day investment plan. In exchange, Winvest is obligated to pay out exactly 3% every single day, completely regardless of whether the broader crypto market surges or crashes. The problem arises when you apply the math of compounding interest to a growing base of users receiving daily payouts. This chart shows the reality of a 3% daily obligation. Sustaining this payout curve requires an infinite, exponentially increasing pool of underlying liquidity. No legitimate financial market generates this much daily liquidity. The actual market fluctuates, constantly falling short of that demand. The trade-off here is straightforward. Chasing massive daily returns exposes you to the extreme, imminent risk of platform insolvency. Sudden, total capital loss is the mathematical inevitability of this specific yield structure. So how does Winvest claim to bypass this math? They point to their automated AI trading engine. The platform claims they use deep reinforcement learning to process market data in milliseconds, achieving a supposed 87.21% accuracy rate. But the trading engine operates on a centralized framework. This means users have zero on-chain proof that any actual trading is occurring with their funds. In finance, this is known as a black box. You can see the capital going in, and you might temporarily see profits coming out, but the internal mechanisms generating those profits remain completely hidden. To counter this lack of technological transparency, Winvest attempts to look legally secure by issuing every investor an official share certificate. Traditional finance uses official certificates to represent legally protected equity, backed by highly regulated authorities and structural oversight. Issuing a physical-style certificate for an unregulated, untrackable cryptobot provides no actual legal protection. It is entirely a psychological tactic designed to build trust. The convenience of this automated bot requires your blind trust, and a PDF share certificate gives you zero recourse if the website suddenly vanishes. We still have to answer a mechanical question. If Winvest charges absolutely zero hidden or management fees, how do they fund their daily operations and pay out these massive yields? This flowchart reveals the answer: a built-in affiliate program. They pay 5% on level 1 recruits, 2% on level 2, and 1% on level 3. Massive promoters unlock the global representative tier, pushing level 1 commissions up to 8%. When a zero-fee platform can afford to pay heavy, multi-level commissions just for bringing in new users, it tells you exactly how their cash flows. The numbers heavily imply that new user deposits are simply being recycled to pay the guaranteed daily returns of older investors. This specific financial structure is categorized as a high-yield investment program, or HYIP. The trade-off of participating is severe. You expose your capital, and anyone you recruit, to a system that structurally collapses the moment the influx of new users slows down. Winvest runs on a constant influx of new affiliate deposits, proving that its true engine is recruitment, not quantum AI. This chart maps out our evaluation of Winvest. plotting risk of total loss against sustainable yield. Traditional stocks and regulated crypto staking sit in the low to moderate risk, moderate yield quadrants. Winvest plots in the extreme bottom right. It carries maximum risk with zero sustainable yield. What we have is a platform wrapping the classic hallmarks of an unsustainable, multi-level marketing structure inside modern AI buzzwords. If you are a beginner or looking to optimize a long-term portfolio, avoid this entirely. Guaranteed daily returns in crypto are a mathematical mirage. You protect your capital by looking towards transparent, on-chain DeFi staking protocols or heavily regulated index funds instead. For extreme risk takers who still want to participate, you must treat this strictly as gambling. Go in knowing that those share certificates offer no real protection when the music stops. The ultimate reality is this: if an algorithm could truly guarantee a 3% daily profit, it wouldn't ask you for $10.
Don't forget to like this video, share it with your friends, and subscribe to Vishal Digital Tech for more updates on AI and technology.